Hi everyone, we are live. My name is David Kosmeter. I am the creator of TimingResearch.com, and this is our web show for November 10th, 2014. We are going to be discussing the 59th weekly report from Timing Research. And if you have not had a chance to take a look at this yet, just go to TimingResearch.com/report, and you can download it there. So we're going to do something a little bit different this week. Dave Landry was a guest last week, and he enjoyed the show so much that he come back as the guest host. So he's going to be our first guest host for the show. So I'm going to turn it over to him now. So,
thank you, David. I appreciate you having me on again. We've got a pretty good lineup here today, if I say so myself. David Osmond, Steve Lentz, Corey Rosenbloom is also here today. Dave Osmond works over at Metastock, and he's that Osmond. Unfortunately, he was born without the talent to sing and dance, but fortunately for us, he knows the financial markets and he knows Metastock very well, and he and I do some business together, so I know Dave fairly well here. Dave, tell us a little bit about yourself and what you do over there at Metastock. Sorry for beating you up a little.
Hey, that's all right. You can beat me up anytime. I'm used to it. It's right. I don't have the song and dance. It's why I'm in the finance world, and me and about every single one of my other cousins and everybody else except for those uncles of mine. I've been at Metastock quite a long time, many years, and I'm a software guy. I'm purely a technical analysis guy. We've had the pleasure with working with Steve and Dave and a number of other professional traders and educators out there. My input today, I think, would be best summed up as a purely technical and system-related type of input. I'm not a financial advisor, and I got to make sure I kind of stay close to those P's and Q's there. I will be happy to discuss and certainly give my opinions on certain technical indicators that I like, that I favor, that I use in my own personal trading, and I'm really, really looking forward to hear from you guys as well.
Okay, cool. Steve Lentz, am I saying your last name correctly?
Yes.
Okay, the T is pronounced. Steve's over at OptionView. He does, I think you're head of the education department over there. Why don't you tell us a little bit about OptionView and tell us about yourself, Steve?
Yeah, OptionView is a software program, high-end options analytics, been in business since 1983, and with the highest-end modeling that's pretty much available to the trading public, and then Discover Options is our options trading educational arm. We focus on primarily one-on-one mentoring, and both in stocks, indexes, and then also futures as well. And so I run the mentoring program. We have a nice team of mentors here that are full-time traders and money managers themselves.
Wow, that sounds pretty interesting over there. Corey Rosenbloom, I've known Corey for a long time. In fact, I've known him so long, I've tried to remind him of some business we did together years ago, and he couldn't even remember. It's been so long, and I could barely remember too. Corey, tell us a little bit about yourself, and tell us how you got interested in the markets, and just give us a little background information.
Well, sure. I kind of bring a little bit of a mixture approach to it. I started in 1999, that bull market run up there, and that was really as a fundamental Warren Buffett style investor. So I got involved in the market from that perspective, but as the market fell the next few years after that, at the bottom, 2002 and 3, I turned over to the technical analysis world and then began to do really focus on sector rotation and the combination thereof of fundamentals, which gives us the what, which stocks, what market conditions, what are the valuations, etc., but not the when, not the timing. And that's where I got technical analysis involved from that point. So 2003 to present, I've been mostly integrating more towards or shifting more towards the technical analysis side and then putting on psychology as well from the website Afraid to Trade. So I do a lot of work and education with analysis each day and, of course, the motivation and the psychological side of the trading business.
So I heard you say that in '99. I heard you say you used the F word there, fundamentals.
Fundamentals, which were grossly. We can maybe talk about it today, but in terms of how the narrative and the story overrides and trumps the fundamentals, because the fundamentals were ridiculously overvalued for some of those internet companies at that point.
Absolutely.
They had greater market caps, right? They had greater market caps than a couple of small companies in the basement or these little small offices had greater market capitalizations than Walmart and things like that. So
it was ridiculous. That everybody confused the issue with facts back then, and wouldn't believe the valuations. But that's where I got known as the guy who draws the arrows, and they named me the trend following moron. I guess that's a good intro for me. I've been trading since the early '90s, and publicly, I've been on trading markets in the mid '90s, late '90s, and I went through the same markets that Corey did, and had a lot of fun doing that. I read 3 books that are in 7 or 8 languages, I forget, and the latest one of those is a Layman's Guide to Trading Stocks. I've been doing this for a while. I was a CTA, commodity trading advisor, for about 14 years. I worked on the institutional side. So I worked on both the retail and the institutional side. I do enjoy the retail side because, like Corey, I like the education. I'm a bit of a ham, and that's when David asked me to come back, I was very happy to come back here. So thanks again for having me on. I guess now we're going to look at the there is a Q&A app for those of you who are watching today. And you can ask your questions live if you want. And David Kosmider is going to keep those questions, and then at the end of the show, we'll go over them and see if there's anything that he wants to put out. And then you can download the current report at TimingResearch.com/reports. And then David, you want to go ahead and start talking about report? We'll cover these questions. If you pull that up, I'll go through the questions. Okay, you ready for me to get started with that?
Okay, yeah, the report's up now, so.
Okay, oh, there it is, good. Okay, question number 2. Let's go to Corey first. Based on any technical or fundamental indicators, there's that F word again, you want to use, would you guess that the S&P 500 index will be higher or lower next week? And this is from Monday's open to Friday's close, November... it should be November 7th through. I'm sorry, is it November 10th?
Yeah, I actually just noticed that's a typo. It should be today.
Yeah, because I'm gonna guess 3 to 7th. I'm pretty sure we're gonna go up, but just by a little bit. So.
Yeah.
It was a joke.
It should be. I forgot to change it on the report, so it.
No worries. Corey, so what do you think? This is this week, not you're making a prediction about the future, not the past.
Yeah, let me dance around. So the fundamentals would suggest bullishness, which is strange. In the sense of there's not many reports today. We have Tuesdays, the Veterans Day. The markets are open, but there really isn't a lot of fundamental news or some earnings taking place. But the biggest thing according to Bloomberg, is going to be this retail sales number on Friday. So that's going to be your biggest really thing. There's some Fed speak on Wednesday, but from the fundamentals or news standpoint, this is probably going to be a muted or a non-eventful, so to speak, week, unless there is some surprises. We're in the aftermath of this election. The Republicans took the midterm election there, the Senate, and expanded their majorities in the House. So that's factoring in the market has been a bullish component. But anyways, that's the fundamental side, just basically nothing really out of the ordinary that should blindside the market. So things should be able to continue. From the technical standpoint, being from the trend following standpoint, this is more normal or more normative in the market environment in terms of extending weekly rallies. We've closed 3 weeks in a row up. Statistics would tell us that generally it's an abnormality or an outlier, which would suggest a downside price. I think I did some numbers. The S&P has traded 16 days above the 5-period moving average only 5 other times since 1998. Each time after that, with the exception of one, that was 1998, during the bull market run-up, the fundamental devaluation thing, it's pulled back the next period there. So 2 of those actually came in 2014 in the sense of these extensions well beyond. So long story short, statistics and probability down. Technicals say down, fundamentals say up.
Okay, so let's get your final answer there, Corey. Up or down? You have to pick one, Corey. Are you going to go into politics at some point? Where did it go? Did we lose Corey? Hey, Corey. Still there?
Yeah, there you go. Can you mean,
I'm seeing
the connection came off. So I'll say just summary. Oh, no, real quick summary. Fundamentals said we're okay. Technical says this is due for a pullback. So I would say let's go ahead and be careful and expect some type of pullback this week, but nothing out of the ordinary, nothing surprising.
Okay, something. So you're saying down.
little bit down, yes.
Okay, and what's your confidence on that from 0 to 10?
Oh gosh, 0 to 10, probably given this market rally, I'd say a 6.
A 6.
6 out of 10 confidence.
Yeah.
This trend things continue. These overextended, yeah, I know, right? These overextended periods going to be a little bit abnormal, and they can keep going just because a lot of people think they can't, and the short squeeze continues essentially.
Yeah, I can't
probabilities.
I can't argue with you on that. In fact, I might even chime in a little bit on that. Let's go over to David Osmond. What do you think for next week, or if you can't give a direct opinion, if you have a system or something you're following, just let us know, and then we'll make it the system's opinion if that works for you.
Yeah, and in fact, this is generally what I use for my own trading. I use a system within Metastock called the RMO. It's a template, includes several different indicators. I also add to it some support and resistance concepts and Fibonacci levels that I like to look at. But by and large, what the system is saying is that it's still it's bullish. It kind of has a holding pattern. It's looking at a sideways move, but it shows actually a lot of strength still to the bullish side. And so for me, I'm actually into the SPY right now, and I'm a bit of a holding pattern to see what happens on Friday. Fridays have been really volatile the last few weeks, and so I'm still holding on to this thing since we broke through some pretty major resistance. I think we're either going to hold right through that this week and stay above it sideways, or come Monday we'll see if that thing decides to go up or down below that resistance line.
Okay, so we're going to go. You have to pick up or down.
I'm going to take up. I'm going to take up. I'm feeling bullish according to the indicators. These have been good to me. The system has been really good to me. I got into this thing pretty much right at the bottom there.
Gotcha.
It's saying hold on tight to the SPY.
Okay, cool. And what's your confidence on that?
A 7 out of 10.
7. Very good. Very good. All right, Steve, what are you thinking, man?
Well, I'll tell you what. I do a weekly show where we go over several different technical indicators, and we issue a report card, and we make the case for the bullish side and then the bearish side. And right now, long term, all the indicators point and figure. Some of the longer term ones certainly point bullish. But boy, you have a real good case for the short-term pullback. The RSI weekly, you have some divergence right there. You look at the Ichimoku charts; those are extended from their equilibrium lines quite a bit. If you draw a linear regression trend line going back to early '09, we're kind of very far away on the upside from that. So I'm looking at there's a strong case for a pullback. But volatility is coming down as well, so I wouldn't be surprised at it being kind of again a lower range bar relative to what we've had. And so I'm going to say down, and confidence level, whenever you say down in a pullback in such a bullish market we've had, your confidence can't be that high. So confidence is a 5, it's going to come down. Yeah,
good answer. A lot of things that you're saying I like too, and I'm known as a trend guy. In fact, I've got a new. I was telling David earlier, I've got a new studio in my office, and one of my props is going to be my little trend arrow. So, and last, I don't know if you guys can see this on the camera, but last.
Oh wow!
I didn't use my trend arrow, and I got in trouble because I said it was going to head lower, and we actually headed higher. I am a trend follower, and when the market's at new highs, obviously. I'm not out there shorting it. However, I've been around the block a time or two, and some of the things that Corey mentioned and Steve mentioned, we're overbought, and we can't stay this way forever. So I think that at some point we will have a little bit of a correction. The other thing that has me a little concerned is that the market kind of went straight up. My little arrow was pointing straight up, and now it's kind of taking a little bit of a veer to the right and making a bit of a tiny little wedge in here. I'd almost rather see a market go up and then kind of sell off a little bit and correct as opposed to that drifting. It's kind of like when they drift, it's like for lack of a better word, I call it a wedge. When they kind of wedge up like that, I think the last of the Johnny-come-latelys and all, they kind of give up and throw in the towel. And usually when these guys buy, usually if I start getting emails from people saying that the market's never going to pull back, I'm just going to trade intraday pullbacks from now on, that's usually about the time we get a correction. And I think that's kind of how it feels. So I hate to go against the trend. I'm certainly not going to short this market. I'm certainly not going to get in front of the freight train. but I'm going to go with we ended the week down, and not by much, but down. And then I'm going to also say a confidence of I'm going to couch and give it a 6 on that. Okay. This was kind of fun. I think everybody agreed except for David. He's following the system. Good for him. So,
I got pretty tight stops on it, though.
good. Do you normally follow mechanically, or do you interject a little discretion into that?
Almost always very mechanically. It just takes out the emotion. When I first got started trading, I just got blown up so many times, like so many people do. And I found that the more I can buckle that down and just take the emotional and psychological presence out of my trading entirely and make it completely system-based, the better I was. And so I fine-tuned that over the years and tried to be really mechanical in my approach. And and that employs a lot of money management. I'm very conservative. I keep pretty tight stops so that I don't take a major hit. I can't afford to. I got 7 kids at home, so I'm pretty conservative.
Okay. Could any of those kids sing and dance?
No, unfortunately they can't either. This is why I'm teaching them how to chart.
Do you really? You really have 7 kids?
I do. I've got one more coming.
Oh my goodness!
It'll be 8.
You're a young guy. You've been busy. So how do you have time to trade or work or anything else?
That's why I don't day trade.
Amen to that. Well, I think on a serious note, I think it dovetails nicely in with your business that you're in, that you're a mechanical trader, and that makes a lot of sense. I'm not a big fan of mechanical trading, but I think it does, like you say, remove the emotions. And if you find a system that fits your personality, which it sounds like you have, it can be a good thing. Especially, we're going to get into a psychological question in just a few minutes. The question: are we on question 1 now, David?
Yeah, I'll move it down to question 1 on page 3 of the report.
And question 1 reads, what developing events, technical or fundamental, will you be watching out for next week? And this is November 10th through 14th, that might have a positive or negative impact on the S&P 500 and other U.S. markets. So what are you watching for over the next week? And let's start with Corey.
Well, same thing. The retail sales number on Friday. Anything about the jobless report or jobless claims on Thursday. Holiday Tuesday. Fed speak on Wednesday. That's going to be the fundamentals or your news-based things. Any surprises on earnings. I'm going to watch the technical levels. So if there is a breakout, especially in this potentially low volatility, low news, and potentially low volume environment, that could just exacerbate the short squeeze.
Yeah.
So that could be a quick move higher. In the absence of news, price can surprisingly move quicker.
Yeah.
So we'll look for that. But yeah, I'm going to look news-based and technically based on these key levels on the chart with the potential for a short squeeze even higher.
Okay. Okay, David, what are you looking for? You're just following your system, right? Push a button, get a peanut?
Well, yeah, I mean, there is a little bit of discretion to that when it comes to support and resistance levels, and I mentioned that earlier. We broke through some major resistance there, and I'm really watching that carefully because that weights the system a little heavily for me. So if we do get down there below that this week or at the end of the week, I'm certainly going to be stopped out. That's right where my levels are. I'm watching that really carefully.
Okay. Steve, sometimes I'll make a joke. Somebody will ask me about point and figure charts, and I said, yeah, I tried it once, and I pointed at the chart and tried to figure out why I lost so much money. But the reality is it does make a lot of sense, and it does sort of, to use the phrase again, dovetail into what I do because of the support and resistance, and it makes sense, and it just conceptually, I think it's a good thing. I don't personally use it. I just like to look at the charts, and I've been doing that for 20-something years, so I'm going to stick with that for now and not try to change it up too much. But you did mention the point and figure, and I saw something somewhere recently where there's some pretty big predictions being made on that. I mean, not to get off the question here, but there's some pretty big predictions being made off that for the market to move higher. Are you seeing the same thing in your research?
You know what? With the point and figure, I just look at the trend, and in particular the percentage of stocks on a point and figure buy signal, the bullish percent index,
Gotcha.
which is pointing bullish now.
Okay.
where the number of stocks that are on a point and figure buy signal, that is growing. So as they say in the world of point and figure, the bulls have the football. But again, that's
Gotcha.
kind of a long-term kind of a deal. What's interesting on the point and figure is that big pullback we had here recently came right down to a really long-term bullish trend line and didn't exceed it and bounced right off it, just like clockwork. Just amazing. And that's kind of that kind of stuff that has to make you look at point and figure sometimes.
Right. Okay, so the question is, what developing events, technical fundamental, for the next week that you think could have an effect on the Ps and other U.S. markets?
Yeah, I think if you were to look at the news, you'd have to look at Russia in the saber rattling that they've been going through. There were a number of comments from folks that did the survey, and I think they're right. That's been established. That kind of an event has been proven to move the market. So you have to watch that. And the other thing I'm surprised was only mentioned once is Ebola. I think this big pullback we just had, and then the bounce is from fear from Ebola. And if that were to come back into the news, we know that the markets respond to the fear related to that. And so you have to watch it. Right now, you can go to Drudge Report, not a single story on Drudge. You go to Huffington Post, there's 2 human interest stories. So it's left the news dramatically here very recently, and if it were to emerge back, well, we know the markets will move in response to negative news in that regard.
Yeah, it's pretty amazing how that died out. And one of the things that I wanted to point out is that, I don't know if it fits into this question, but what's amazing me is the amount of what I call debacle du jours that we've been having lately. Markets making new highs, most sectors at new highs, but some of these stocks, they're just taking them out and behind them with shit and shooting them. I'm amazed at some of the, like I said, debacle du jours. These stocks are being halved overnight, and especially those more speculative biotech stocks, they went straight up on Ebola and they came straight back down. So I think you're definitely on to something there, Steve. I think that if Ebola goes back, and unfortunately, I'm afraid it will in some shape or form. I don't think it's done just yet. I think it's too serious of an issue, but or a problem, I should say. But let's hope it doesn't come back.
Right.
I'm Steve. Do you have anything else to add to that?
No, news-wise, that's what I would look at.
Okay. I'm a technician, a pure technician, and I do get a little news through osmosis, and I understand that Russia's doing some saber rattling, and what else is going on? I just learned from Steve a couple things here. So, but no, I'm not worried about the news. Obviously, it's the reaction to the news, and not the news in and of itself. I think you can chase your own tail if you ended up watching too much news. So I'm not focused on anything other than the technical fact that we're kind of in this little bit of a wedging pattern. It's not a pattern that I directly trade, but it's something that I pay attention to. And the other thing is, as I wrote in my column this morning, it's harder for me, I think, or for anyone, I should say, to predict the overall market than it is to predict individual stocks. The overall market tends to be more efficient than individual stocks. So I would rather dig through a couple thousand stocks every night and try to find those that I think have the potential to move, as opposed to try to predict the overall market. But it does help to watch the market over the years. And when you're overbought like this, and then some of the dynamics that Corey brought up, and I think Steve brought up some other dynamics too, that we're overbought, you do and you will get a correction from that, whether it's going to be this week or next week. So the fact that what I'm seeing is that little wedging drift and the debacle du jours, that has me a little nervous in here. So I think we're due for that correction. As a trend follower, I'm not going to call a top. I'll be the last guy to call a top, or one of the last guys to call a top. So we're still headed up, but I think over the next week, technically, I think we're finally due for that pullback. Okay. Now, where do we go to next? Question 4?
Yeah, I'm going to move it down to question 4 now.
Okay.
No?
What's the guy's name? The astrophysicist. You kind of sound like him for a second there. Maybe it's just my audio. Okay. What's his name? Hawkins, huh?
Stephen Hawking.
David Hawkins. Did you guys hear it too?
I did. It was close.
Okay. Between methodology, and Corey, you're going to be first up on this one. Between methodology, money management, and psychology, what do you think is the most important and why?
Well, I would actually combine that, maybe a little bit different perspective, but I work with this three model method, which is the method, the strategy, and that to me, a lot of people said that was number one. I would disagree with that vehemently. Method is easy. Somebody mentioned that too. There's a lot of ways to make money. Really, there are, and I can give you a simple one. It's buy pullbacks, as Dave could say probably too. Buy pullbacks in strongly trending markets.
Yes.
Do the stop loss management, target, etc. That can be very, very simple and effective. And that's just a method. That's just one of many. Psychology, I think, is probably the biggest, which is going to be actually doing what your system says. And the turtle traders is a good example of that, how they were given all the same rules, and yet at the same time they had variance of returns, because some of them said, I'm going to beat the system, the rules are not appropriate, or I'm smarter than the rules, so on and so forth. So their returns varied depending on how they applied the simple rules that they were all given. And I would actually throw, again, money management under method, which is just money management, how much to buy, how much to risk, etc., and use the word adaptability. So my third would not be money management. It's the ability to adapt to market changes like what we're seeing. And for me, that's the narrative, which is a stimulated economy or stimulated markets with expanding fundamentals leads to this overbought, overextended period where multiple weeks in a row go up, which isn't that much different than 1999-2000, the irrational exuberance. So I would argue the ability to adapt and know when to change your strategies, be it a trend following, be it a breakout, be it a reversal, be it a fade strategy, which again is arguably simple. The ability to put it on and execute it consistently is difficult, but I think if you don't have the ability to change, you short circuit yourself. But that's how I would do it. I would put money management with a methodology, and would say adaptability is key.
Okay, so you would say, could you give me just percentages on methodology, money management, and psychology? We don't have an adaptability,
Yeah.
so just,
Okay. Well, I would say of the three at that point, methodology is 20%.
Okay.
Psychology probably is 60%, and money management, I would again argue would be methodology. That's important, so I'd put it 20% also for money management, position sizing, so on and so forth.
You know, it's interesting you brought up the turtles, because I haven't read any of the turtle books. I did. One of my peers was telling me about at the AAPTA, was telling me about The Way of the Turtle by Curtis Faith, and I would recommend everyone here.
Yeah, it's a great book.
Read it. And they started his I guess his peers started hating him because they thought he was cheating somehow, or he just had he didn't care, basically.
Yeah.
And he had the discipline to follow the system because he didn't care, and he just had that's his personality. And it's interesting that the other people that he was trading with began kind of hating him because he was just following the system. So I found that kind of fascinating. But it is a good book, and it's entertaining too. So I would recommend everyone out there read it. Maybe David could put up a link to Amazon or something on the site for people to check that out. All right, David Osmond, let's hear from you. You have the question. It's between methodology, money management, psychology. What's the most important and why?
Well, it's interesting, and I really agree with a lot of what Corey just said there, especially the adaptability. You do have to change, and everybody does change, even us who are just hard and fast to our systems. Our systems will change over time as the markets change. I think the psychology is hugely important, but I wrap that right into the methodology. I find psychology to be so important because it's the most, I think, debilitating factor in whether or not you can be successful or not. I think people are, especially the retail trader, is so subject to the fear and the greed, being that it's our money, it's in our pockets, it hurts so much when it goes, and it's so exciting when it comes, that without a hard methodology and set of money management techniques that you follow religiously, that psychology can turn into your worst nightmare. So I'm going to say, for the most important part, I wrap those all together, but I would say for me, obviously, my methodology and my money management are the core, and those kind of keep my emotions from ruining things. So I don't know how to phrase that other than I'd probably put my methodology in at 50% and split the other two.
Okay, cool. That'll work. All right, Steve, let's hear what you have to say.
I'm learning a lot from listening to you guys. This is great. We get a lot of students coming
Likewise.
to us, and the first thing that we do is deal with the money management stuff. They're trading too big, and that affects the psychology and the confidence level and everything. So I got to believe that money management and proper position sizing is at least as valuable as the other two combined, at least from my perspective and in our world here, in getting folks just to trade the correct size and risk an appropriate amount for each particular trade. And so I'm going to put money management at 50%. Psychology stems from that in confidence. If you're trading an appropriate contract size, an appropriate amount, and risking an appropriate amount each trade, well, that's going to help your confidence level not get depleted because you get blown out from trading too big. And so I would put psychology at 30, and methodology I'd put at just 20%. There's so many different ways to trade. You mentioned the turtles; they traded a breakout approach, as I recall. There's also what Corey mentioned, I agree with, in a strongly trended market, trading the pullbacks. So many different methods. A lot of our students, they just trade non-directionally using various option strategies. So I'm going to put methodology as the number 3 in that list.
Good answer. Good answer. I like that answer. I like the way you touched upon the importance of money management. And one thing that I wrote about money management is that money management will cure a multitude of sins. And if you're trading at the right size, then the psychology doesn't really matter that much. You're still going to be able to make your next mortgage payment or whatever the case may be, and it's not going to materially have an impact on your lifestyle. I'm actually going to, as far as my survey is concerned, I'm going to weight all 3 equally, and that's not actually a couch, because I actually do a presentation where I talk about the 3 pillars of trading. And that sounds kind of stately when you say pillars, and it makes for a great graphic. But once I get into the presentation, I call it the 3-legged stool, because the pillars are pretty stately. Looks like 1 or 2 could hold up the building, but a 3-legged stool is not going to stand up without one of the legs. And each leg is going to be, one leg's going to be psychology, one leg's money management, and one leg's the methodology. And then what I've been doing lately when I talk about those 3 things is I've kind of visualized them like a rope. And if your money management gets better, you're not taking excessive risks, so automatically your psychology becomes a little bit better, so you're not so emotional. And then the methodology actually improves too, because you're following the methodology better. So I think the 3 are really intertwined, and if you work on just one, you automatically become better at the other 2. So I'm going to go equal weight on all 3. And then the other thing I want to just point out, if you do anything, if you're a novice and you're struggling, or even if you've been around for a while and you hit a drawdown, the best thing you could do is plan your trade and then trade your plan. And it's amazing how many people won't do that. And I did a lot of thinking about this a while back, and I was trying to figure out why. And I think the moment that you plan your trade, you admit that there could be a failure aspect in that trade. And nobody wants to admit that they could be wrong, and nobody wants to admit that failure. But if you learn how to do that, then especially in the money management, it's like instead of maybe I'll change my answer to money management 100%, methodology 100%, and psychology 100%. Because they're all 3 vitally important. But I guess for survey purposes, I'm going to go 33 to third, 33 to third, and 33 and a third on those. Okay. All right, next question. Is that the last one, or we have one more?
Oh, that's
I'm sorry, I cut you off there, Stephen. That was a joke again. Sorry. Okay, do we have any questions from the audience? David? David. I was going to make another Stephen Hawking joke. Sorry about that. I failed miserably.
Sorry.
I better keep my day job.
No questions so far. No.
No questions. Wow. It's because like Steve said, I'm picking up a lot of things and a lot of good stuff here.
I think most people are watching on the YouTube page. I don't think the Q&A. I think the Q&A thing is only available on the Google Hangouts page. So.
Gotcha. Let's go ahead, Corey. Why don't you give us some closing thoughts, and then we'll go to David and then Steve on that. Any closing thoughts?
Let me look at the levels. On the S&P, of course, we're looking at the 1220, just for quick reference in terms of technical levels. Under 1220 would be cautious bearish. It would not really get bearish in the market until under 2000, really. So otherwise bullish. NASDAQ would be bear under 4600, really bullish above 465. So that's unlimited target up, target down 445. Russell bear under 1160, which that target's 1120, but above 1200, 1210, just bull proceeding that way. And the Dow Jones, it's bear under 17.4, target 17,000 if it's under 74. Otherwise, a bull above 17.6, and that has an unlimited target as well. And we don't have targets really in upside breakouts because they can extend, and these feedback loops where bulls are buying, some of them are adding to positions with systems. Others are just emotionally saying, I'm going to get in this. I missed the pullback, and they emotionally buy, which exacerbates the price move as bears and short sellers frustratingly take their stop. So those are the key levels, just kind of a quick overview of the indexes for the U.S. markets there.
Gotcha. I just realized something. Statistically, 3 out of 5 people in this group today are named David. So
That's a good thing.
So David Osmond, tell us, you have any closing thoughts?
Yeah, gosh, first of all, I've really learned a lot from you guys, Corey and Steve and Dave. Thank you for your comments. I've actually taken quite a few notes here. I think this is great value to the retail trader. We got to get opinions from people who trade and know what they're doing, and take lots of different opinions and take them for what they will. And I've agreed with a lot that's been said here today. I think the one thing I want to say to people, just in parting, and it would be maybe a little self-serving, but hey, you got to have a great platform to chart on. You got to have the right tools to do it. And if you'd like to, just visit us at metastock.com, get a free trial. We'll work with you and get you set up. But it's a terrific package, great, excellent program. It's the one I grew up on. It's been around for 30 years. It's going to be around forever. We've watched a lot of competitors go and disappear over the years. So we want to invite you to try it out, definitely. But really, I would say keep your eyes open on those support and resistance levels, especially we're talking about the major indices. That's going to tell the whole story. If we break below those, break above those, I think that's where we'll get a lot of movement.
Okay. Corey had pointed out in one of the prior shows, he says there wasn't enough controversy in the show, and it sounds like we're all agreeable. Just let me warn you, David Osmond, don't kiss up too much, or Cosmitter will make you the guest host next week.
Hey, my last name is Osmond. All I know is to kiss out. Come on.
All right, Steve. Let's hear some closing thoughts for you, and I guess tell us a little about Option View before we leave. And
Sure. Well, just to wrap it up, previously we discussed how the markets are bullish. I do a weekly show called the Morning Market Huddle for some of our mentoring students, and then another one for our serious non-directional traders called the Inside Wire. But we, clearly the markets are long-term bullish, short-term overbought, looking for a pullback. One interesting aspect is that the volatility of the market itself has been declining. And I created an indicator in Option View called the Lentz Volatility Index, and that's definitely flashing right now thumbs up. If you like to sell premium neutrally, butterflies, condors, that's flashing positive right now. But we, at OptionView.com, you can go and get a free trial of our software. If you're an options trader and want the highest end analytics, check us out. And then our educational arm is DiscoverOptions.com. 28 different mentoring courses, and you can piece together your own custom educational grouping of classes there if you'd like. So love to hear from folks, but I appreciate you having me on too. Thank you very much. I've learned a lot, and it's been great.
Sounds like you got a lot of good stuff going on over there. The only thing I wanted to kind of mention, just one thing I forgot to talk about earlier, is that in my view of the markets, I think you can only look. It seems like most of us here, or someone of agreement, you can only look so far out. It's like if it's cloudy and thundering outside, there's a pretty good chance it's going to rain, but you don't know if it's going to be raining this time next week or next year or whatever. So I only predict the short term when it comes to markets, and I'm willing to stay with that position as long as it moves in my favor. And sometimes we'll have positions that'll stay in the portfolio for 2 or 3 years. So As far as my approach, like Corey said earlier, I keep it simple. I'm mostly trend or 100% trend. Sometimes emerging trends, meaning that the market begins to roll over. Like recently, we had a bow tie sell signal in the S&P 500. It didn't turn it to the Mac Daddy. It turned it to an 8% loss at the P's, which is great. An 8% signal's not bad. Better than poke in the eye, I suppose. But do keep an eye out. If that market does begin to roll over, we start getting some of these signals. I think everyone has been spoiled since 2009, thinking that the market will never go down again, and that's when it starts getting a little dangerous. So do pay attention if we get more signals in here. I write a daily column at DaveLandry.com. It's free, and I have a newsletter over there. So if you want to check it out, and you can follow along with I have a daily column called Random Thoughts, and which is appropriate, as you can tell from my speaking today. But anyway, I think thank all you guys for showing up. Thank you, Dave Cosmetter, for making me host again. And I think Dave's got a few. David Cosmetter has a few closing words. You want to take it over from here? Talk about the survey and etc.
Yeah, just want to remind everyone who's watching to go to TimingResearch.com/current survey sometime before Sunday to fill out the survey for Sunday, the report that will be published on Sunday. And I just want to thank all of you guys for being here again. Dave Osmond of Metastock.com, Corey Rosenbloom of AfraidToTrade.com, Steve Lentz of OptionView.com, and our very first guest host, Dave Landry of DaveLandry.com. So just thank you guys for being here.
Thank you.
Thank you. Great to be here.